Hello, you're welcome to FinInvest Niger. My name is Tom Princeville. I'm a certified investment and securities specialist, and I've been investing for the past 2 decades. So in the course of this video, I would like to fundamentally analyze this company, Cadbury Nigerian Plc. Cadbury Nigerian Plc. We want to determine precisely whether this company could be a candidate for your portfolio or not. Let's start with the company's revenue. The company recorded a revenue of 29.165 billion naira in the full year 2024, as against 169.837 billion naira in the full year 2025. So the company quality did a gross profit of 18.228 billion naira, 18.228 billion naira in the full year 2024, as against 36.600 billion naira in the full year 2025. That's it. So we also want to look into the company's operating profit. The operating profit here is 5.961 billion naira in the year 2024, as against 20.550 billion naira in the year 2025. This is an increase of about 14 billion naira, from approximately 6 billion to 20 billion naira. So we move down to the company's profit before tax. The profit before tax, unfortunately, the firm recorded a loss position of 28.326 billion naira, minus negative 28.326 billion naira in 2024, as against a profit level of 17.268 billion naira in 2025. Then for the profit after tax figure, there was a loss of 22.225 billion naira, 22.225 billion naira, as against a profit level of 12.089 billion naira. All right. So you could discover that there's a recovery after the losses recorded here. Now we move down to the company's earnings per share, which as we all know, is the most important parameter, value in the whole analysis we are carrying out, because this is what determines future increase in the share price, and this is what equally determines the company's valuation. This is also what governs the level of dividends a company pays out. Generally, a company pays out dividends out of its earnings per share. Okay, not just out of the earnings, but out of its earnings per share. So the higher this number, the higher the dividend payout. The lower this number, the lower the dividends the company would pay out. So we are through with this segment of our analysis. This segment represents the profit and loss statements of a typical financial statements. We now want to highlight the other aspects that represents the cash flow statement, as well as the balance sheet. So let's start with the cash flow statements here. The company has a cash position of 15.016 billion naira, 16.016 billion naira is the company's cash position. All right, so the company can very easily carry out minor commitments financially without resorting to expensive borrowing from the bank. Now we look at the company's equity. This is the equity or the shareholder value. This particular value is telling us that When you subtract the company's total liabilities from its total assets, this is what you are going to get: 16.468 billion naira. 16.468 billion naira is the company's equity or shareholders fund. It's telling you that the balance sheet is very strong. At least we're not having a negative equity here. Okay, this is the shareholders value, shareholder fund. So it's the company has a strong balance sheet. And we now consider the equity per share. This is what is known as the book value. The book value here on its own is not really telling us that much about the company, but by the time you compare the book value with the actual company price, that will tell you precisely how cheap, okay, or how expensive the company is. Now, this is what is called net investing. All right, net strategy. So net investing essentially entails you buying a company at below book value. It hardly ever occurs. It rarely occurs. But in a case where you come across a company selling at or below its book value, please rush and buy that company, because that's a bargain. All right, that is a real cheap company. In other words, if this Cadbury is selling for 7 naira, okay, or 7 naira 22 kobo, you understand? That depicts the fact that this company is very cheap. But unfortunately, it's selling at 68 naira compared to its book value, which is 7 naira 22 kobo. So generally, when you subtract the company share price from its book value, all right, if the result is huge, okay, if the result is huge, that means the company is expensive. And if the result is somewhat small, okay, that means the company is less expensive. So this particular value is there majorly for comparison purposes. You compare this value with the actual company share price. Now, the share outstanding here is the number of shares outstanding is 2.28 billion naira. Different companies have different shares outstanding, different number of shares outstanding, which is normally the smaller the share outstanding, the better, because this is what essentially influences the earnings per share. All right. So the bigger the share outstanding, the smaller the earning per share, and then the smaller the shares outstanding, the bigger the earning per share, and then vice versa. Okay. If you reduce this particular value by 50%, okay, you'll be increasing this earnings per share by 50% as well. Generally, the smaller the shares outstanding, the better for the company's earnings. So for the market capitalization, this is 155.06 billion naira is the market capitalization. It's telling you how big the company is. It's a fairly big company at this market cap range. Now, we want to highlight the company's PE ratio. This is a very important figure when it comes to company valuation statistics. So essentially, by the time you divide the company share price 68 naira by the earnings per share, that's 5 naira 30 kobo, you are going to get 12.80. This is the company's PE ratio. Okay, so this particular value here is for comparison purpose. Essentially, you can compare this with other companies in the same sector. Okay, compare this value with other companies in the same sector, and so generally to tell you how expensive the company, how cheap the company is in relation to other companies in the same sector. Okay, and so in other words, it's also telling you that you are buying a 1 naira earnings in this company for 12 naira 80 kobo. It's like walking into a shop and you're buying an item worth 1 naira for 12 naira 80 kobo. Okay, so it shows you that it shows you how expensive or not the company is. All right, so it isn't other, because this particular value is not other expensive. It's just a lower double digit figure. But as we was to be a single digit figure, that would have made the company very cheap. All right, so this is all about the company analysis, and for the fact that the company is recovering from a loss position, I will recommend this company. If you want to buy, you can make it maybe 5% of your portfolio. All right, if you are interested in the company because it's recovering, and we want to believe that the recovery will continue into subsequent quarters. All right, but if you really you want us to work together, one on one. You want me to manage your portfolio, to guide, to recommend, to reshuffle, rebalance, and do all the portfolio uh, management work for you. Please, you could contact me on this number, so we can work together and see how we can optimize your investment returns at the end of the day. So it is 080 6602 8818. So when you contact me, we'll sit down and see how we can optimize your portfolio, all right, and make it more profitable. All right, you may watch these videos and see me kind of analyzing many stocks, but you don't know precisely which one you put in your portfolio or not. This is where my service actually comes in, to actually optimize what you have there for better returns. Please like this video and subscribe to this channel, and also share this with people around you. All right, so thank you very much for watching.